October 17 is the date Treasury Secretary Jack Lew has circled on his calendar when the U.S. will be down to its last $30 billion. But the Congressional Budget Office gives Treasury until the end of the month because CBO thinks Treasury can stretch its dollar a little further. But no one disputes that some big payments will be due. $12 billion in Social Security checks are scheduled for the 23rd. And then on the 31st, Halloween, markets may be spooked when a $6 billion debt interest payment comes due. The very next day, $67 billion must go out. $25 billion for Social Security, $17 billion for Medicare, and $25 billion for active duty military. So who would be left holding debt in case of a default? Governments for one, then mutual funds, insurance companies, and banks. At 16%, the U.S. Federal Reserve is the biggest owner of public debt, followed by China at 11%, and then Japan at 10%. Banks own only 3%. Citi has the most, it's $63 billion. Then JP Morgan at 19%, Morgan Stanley at almost 16%, Bank of New York Mellon nearly $15 billion. Then it drops off. Bank of America, $726 million, Wells Fargo, $520, and Goldman Sachs has just $28 million. No one wants to contemplate what would happen if Congress doesn't raise the ceiling. About the only good news? There are no cross defaults, which means a default on one bond doesn't trigger the default of another. Hans Nichols, Bloomberg, London.